Hello, this is a deep dive into the seller buy down strategy. I sent out a video last week and got great feedback, but I really wanted to get into the details and show you how this strategy can help sellers and buyers meet in the middle in this high interest rate environment. Also, where we could start seeing price reductions. We just had a transaction last week to where the buyer was going to back out entirely unless the seller gave a $50,000 price reduction, which is out of this world, but we were able to illustrate this and offer a solution. So let's get into the presentation. There's also a link to view this presentation 24/7 down below in the email. So here's the strategy. I'll walk you through it. So on the left-hand side, we have three columns. The first column here is a $500,000 house with 10% down at a market rate of 6.5%. That gives the buyer a $3,600 a month payment, roughly, with just shy of $60,000 out of pocket. Okay, so the next column is a $500,000 sales price with a 2% seller credit. So the seller is netting $10,000 less. They're giving the buyer $10,000 or 2% to buy down their interest rate to 5.5%. So buying down that rate from 6.5 to 5.5 lowers the monthly payment for the buyer $289 a month. And the buyer's cash to close is just about the same, just shy of $60,000. So again, what we're doing here is maybe there's a house that's been sitting on the market and the buyer says, well, it's listed for 500. I want to offer 490. That's not the best thing to do in this situation. It would actually be better for the buyer to say, we'll pay the 500,000, but give us a $10,000 credit to buy down our interest rate. That's going to save us nearly $300 a month. You can see in the third column over, this payment savings is essentially the same as a $40,000 price reduction. So a $500,000 home, the buyer putting 10% down, asking the seller to credit them $10,000 to buy their rate down, saves them as much as they would pay on a $460,000 house. So again, it's a win for the buyer because they're locking in that payment for 30 years. In this example, they're actually saving almost $30,000 in interest over the life of the loan. And instead of the seller doing a price reduction of 15, 20, 30, 40,000, they're crediting the buyer 10,000. So they are netting a little bit less money, but it's much better than doing a $20,000 price reduction, let's say. So this presentation format, I send to all of my clients, not necessarily this strategy, but it's a mortgage coach presentation. It shows the buyer everything about their loan. It's fully transparent. It shows the closing costs, monthly payments, everything. So let me dive into that a little bit more. So above the third column here, if you click the more information button, it pops up a dialog box. You can see exactly how the monthly payments are broken down: principal and interest, property taxes, homeowners insurance, mortgage insurance, to give the buyer their total monthly payments. If we click the closing cost tab here, it shows a total estimate of the closing costs. So there's no hidden fees. You can click the fee detail down at the bottom and see an itemized chart of appraisal, processing, title fees, etc. And so this presentation is super helpful. If you're not working with a lender that uses this, I encourage you find someone. We send this to every buyer, every pre-approval, so that they know what their payments are like. We can also custom tailor this to show any price point and any down payment that we want. So if you have any more questions about this, please let me know. Again, I think the seller buy down strategy moving forward into this changing market is going to be huge, to at least be able to have ammo to offer solutions for buyers and sellers to make deals happen. We're going to have to be creative. We're going to have to be aggressive. I hope you find this helpful. Please reply and let me know what you think. Have a great week.